Alright, I'm about to do a recap of today's trade as well as yesterday's trade. So first, let me go ahead and clear out all of this stuff I have going on from today's trade. Alright, so let's go ahead and get started. So usually the time frame I trade is going to be 9:45 New York time to 10:15. That's ICT's macro window. The window is usually it's usually 9:50 to 10:10, but doing some research and all that shit, 9:45 to 10:15 works better. So back test that if you don't believe me. Try for your own shit. I'm not gonna fucking sit here and try to convince y'all. Just telling y'all what works for me. So to get started on the day, I mark out the liquidity zones, buy side, liquidity, some sell sides right here. Let's go ahead and mark this out. Some sell side liquidity. The sell side is going to be green, initiating we're going to look for longs here, and the buy side is going to be red, meaning we're going to look for shorts here. And on as well as that, I got some trend lines marked. The 15-minute, we got it going one upwards, as well as a downward, kind of forming a wedge, and we just broke out of it. So it's gonna seems like it's gonna go higher, but we're not gonna worry about that right now. So what I like to do is I mark out the midnight price, and I also mark out the 8:30 price. So the reason we do this is with ICT concepts, we're looking for a Judas swing, and we could get into that sometime later. I'm gonna just kind of explain the trade, right? So if I'm bullish and the price is below the midnight and below the 8:30, then it's telling me we're in a good discount price, and it's good. It's a good place for me to look for longs. So when we open, it hit one of a bullish FVG I had marked out. We rallied up a good amount, and I had a 15-minute or an hourly FVG up here. Or here's a 15-minute FVG. I deleted it. Let me mark that back on. So I like to mark out the FVGs with the small dashed lines, and then my just liquidity zone of like a swing high, or a little longer dashed lines. So anyways, we bounced off in that pre-mark, or right at opening, bounced off of it, hit the FVG. That would have been a good scalp, from 47 to 76, 77. That would have been like a good 30-point trade. I didn't take it, unfortunately. It is what it is. So then from that FVG, we started dropping. As you see, we started dropping. And I also like to mark out my my time zones. So I'll use the timeline, mark at 9:45, and I mark out. I do this off before the market opens. 10:15. All right. So, all right, let's get it. So I got my areas of interest marked out. My FVGs, my sell side liquidity, buy side liquidity areas, whatever, right? 9:45. We're having a pretty heavy drop. We sweep this liquidity. We run through it actually, and then we sweep this FVG, this 15-minute FVG that we have going on. So yeah, we sweep the 15-minute FVG, and as you see, we kind of bounce off the trend line that I had marked. Bounce up it. We sweep more. So we kind of sweep this again, which is called a unicorn setup, which basically is, we sweep sell side, we have a little balance, and we sweep sell side again, giving us a bigger probability that this trade is going to work out. So what I like to do is after an area gets ran through, I just remove it, get all that junk out the way. We'll go ahead and remove this fucking FVG. We ran through it pretty good. So in our time frame, we swept the sell sides, and we're below midnight and 8:30. So obviously looking for some longs. Some people might see this bearish FVG or this bearish FVG and trying to short this. And if you shorted this, it sucks. You probably got fucked unless it was a small scalp. So we sweep this low for a unicorn setup. Let's go ahead and just kind of fix this right here. Take off this extension. Yellow lines are gonna mean the sweep, you know, just so y'all know. When I do a little yellow line like this, that means the area got swept. Just showing y'all where, boom, it got swept through, broke the structure or whatever, you know. So from there, we bounce back up. We do form a small FVG here. I'm gonna go ahead and mark that down. Just put a couple minutes up there. I usually just mark it up until the end of the macro window. From here, I wouldn't try to enter off this because we didn't have a displacement yet. And what a displacement is, like I think I've mentioned before, is we broke market structure, which is what's exactly that happened right here. We broke that swing high. Let's go ahead and mark that out. And the main reason I had a daily confluence was just or a bullish confluence or a bullish bias in the morning was just looking at the daily chart. This is what I always do. I look at the daily chart and see what's going on. Daily chart, you know, we previously tapped into a bullish FVG right here, and then yesterday we had a green day, so I'm expecting more green days until we get like an obvious structure shift on the daily, which we haven't yet. So until then, my bias is going to be bullish. So let's go ahead and go back. Alright. So look, we swept more sell side. That's a unicorn setup right here. We go up, we displace, we break market structure. That's exactly what we want to see. So that's what we need for a trade is first, you know, we sweep sell side, which we did. We displaced, we broke market structure, which we did. Now we look, was an FVG created? And look at that right there. An FVG was made right here. Go ahead and just mark this out. Boom. You see that entry is going to be right here at the entry is going to be in the FVG. And what some of y'all may not notice is we're also inversed a bearish FVG. And when we inverse a bearish FVG, like if you're bullish and you inverse a bearish FVG, and then you form a bullish FVG within that same zone, that is like a great probability. So since it's a bearish FVG, I'm gonna just still mark it out as the red. Let's go ahead and show, and look exactly where price went into. You know, we went kind of halfway into the bullish FVG, but on top of that, we tapped in to where they kind of overlap. So where the bearish FVG and the bullish FVG overlapped, that would have been like a perfect entry right here. I had a little late entry, I entered like somewhere around here. But, you know, if you ever see a bearish FVG get inversed into a bullish FVG and you're not sure if it's a big zone, or if it's a big zone and you don't really know about the entry, where they overlap is going to be like a perfect entry, because there's still, the way the algorithm works and shit, there's still orders that could be filled here and here. So it's just these orders and these orders that could be filled, you know, it just adds to the probability. So from there we would enter right here, right? This is going to be our entry marked with the circle. Then we'll go ahead and come over here. I'm going to go ahead and just take out the time zones. But you see how it happened in our 9:45 to our 10:15 window, New York time. That's the best time. That's the time we look for a reversal trade. But I'm going to go ahead and take this shit off. Let's go ahead. And what we target is, you know, usually what I started doing, off someone else had put me onto it, take off some profits after 25 points, just in case, you know, just so you can always secure some profits. So from here at 19:30 we entered. Let's just say if you entered right here, 19:30, I mean, like I entered up here a little bit, right? It's like at 19:35, I was a little late, I was a little distracted. So 19:35, let's just say we do I took some off at 25 points. So that would have been 40, like 60, 1960. And look, so 1960 would have been 19060 would have been basically right here. I'm gonna mark the targets with a blue marking, or I'll do orange marking for the targets. Nah, I'll just do the blue marking actually. This one right here. I don't like the way that looks. I'll just do this one. First target was right here, and then from there we target the next. So final target's always going to be opposing liquidity. So, but what I had targeted was I had targeted here to secure the 25 points, and then I targeted the next swing high or short-term high, which was this right here. Let's go ahead and change this. This would have been my target, second target, and the final target would have been, it wasn't this, was this swing, would have been either of these swing point highs, because you see we're kind of in this range from here to here was the range we're in. But I personally had my target right here. It kind of aligns with the trend line, so just in case of if we decided to have another reversal here, you know, it's kind of added confluence because the trend line. So for me, it was like a no-brainer. Why not exit here just in case? So here was our entry, right? We grind up, hit first target. We move stops to break even. So stops would have been right below this second FVG or below this FVG that created where our entry was. But personally, I had mine right here. I'm gonna mark this down with a red line. This was my stop. It's my stop right here. My entry. Let me just mark this out with a circle. My entry. We'll have first target right here, hits. And one thing to note, when it's like an algorithmic trade like this, if you're bullish, every red candle should act as support. Alright, so you know we have little chop shit going around, whatever, nothing that's gonna phase us. Don't get scared out of this, because you know, draw yourself a trend line. I know it's like some retail shit, but you know, still respecting the trend line. And what I mean by, you know, every red candle should be acted as support, what I mean is, like, look at this. We rally up a little bit, so we hit second target, we come back. You don't want to get scared, because look, red candle, I mark it at the body. It came down, and what did it do? It respected that red candle, acting as support. And from there we go back up, and look, we fuck around with the midnight range a little bit, and look at that. Let's take this off. What I said about the red candles should act as support. Look at that. Where is it getting supported at? The start of the body of the red candle right here. Now, you can't really make this shit up, you know, like I've done my back testing. It's pretty proven that I proved to myself that it works. So after first target, I have moved my stops to break even right here. After second target, I moved my stops to right here. The start of the little consolidation. Then when we're chopping around here a little bit, you know, I trust in the trade, but at the same time, you never know. Like, sometimes the trade might just say fuck you and reverse. So I then moved my stop. I'm gonna put my stop. So that's my stop, right? I then moved my stop up to here, because I seen this supporting, so I was like, if this, you know, breaks, I would at least be able to secure here 19068 from 19030, at least be able to secure about 38 points. So then from here, you know, I was still watching and it was supporting, so I wasn't too stressed, but I still wanted to at least put my stops in profits just in case. And then, you know, we chop around for a little bit, then we go up, we hit final TP at 1903. So I know I know it says 19103.75. I always put my target like a point or two below, just because that's what I personally do. You know, y'all can do what y'all want, but that's what I do, just in case. So my target was at 19102. Final take profit right there. And that was the long trade we had for today. Look, just look how easy and simple it looks. Let me just do like a quick brief overview of what had happened. Quick rundown. So boom, look, 9:45, we sweep sell side. We bounce up, we reject off this bearish FVG, that's fine. Boom, we sweep more sell side, we create a unicorn setup. That's just adding to our probability. And do keep in mind this bearish FVG, a lot of people might go short here, and that's what you don't want to do. So we go up, we break through this FVG, displace, broke market structure, and then formed a bullish FVG. So we go ahead and mark them both out. You know, you can either have your entry at the beginning with the bullish FVG or where they overlap. I personally just put it at the beginning with the bullish FVG because I don't want to overcomplicate shit. So from there, I put it right there. And since there was 2 FVGs made, I put my stop under the second one right here. If it's only one, you could put it below the candle that made the FVG or the low of the lowest swing point, you know. So from there, we made the bullish FVG, we entered on the bullish FVG, targeted 25 points from our entry, which was our first target. Next, we target, you know, the next liquidity zone area, which was right here for me. That's second target. And the final target, or, you know, it doesn't have to be your final target, but for me it was. It should be like London highs or London lows if you're bearish. So I believe London session is from 3 to 5 New York time. I'm not 100% sure. I may be wrong. But and because there's a FVG above here, so I was like, why not just use this one? So this was final TP, if that makes sense. Run through sell side liquidity. Displace, break market structure, forms a bullish FVG, enter on the FVG, target opposing liquidity right here, swing point high, short-term swing point high, next opposing liquidity here, or London highs. I mean, you could have held for an extra 40 points if you wanted, or 36 points if you want to be exact, but I personally didn't. That's just my risk management, how I work with my targets and everything. So today is July 11th. This was the trade for today. I did take a trade pre-market. I believe I took a long here. Fucked me over. I'm barely experimenting with pre-market. You know, I take small positions just in case it doesn't work out. But I'm still kind of trying to get into it because there is like some manipulation moves here that you could profit off of. So, you know, I'm kind of experimenting with that. But excuse me, 9:45 to 10:15 is the golden zone. This is where ideally you would want to find a trade. If you don't find one at 9:45 to 10:15, I wait to, or you don't find one at 9:45 to 10:15, then you then wait for 10:45 to 11:15, and you could make a trade there. Like for example, let's say if I traded 10:45 to 11:15. There was a trade here you could have took a short off this. Look at that. Let's go ahead and see. So look, we swept buy side. Unicorn setup right here. Swept more buy side. Break market structure. No FVG made, but we kept going. I know we didn't really break market structure again, but we did break this intermediate term low. So I used that as confluence. We have a little, where's it at? We have a little FVG that was made here. You know, you could have entered off here short, and it did go into, let's go ahead and move all this shit. We had a bullish FVG on the 15-minute. It hit that, you know, that could have been your target. That would have been the easy 19,121 to 19,100. Easy, quick 20 points. You would have only been risking like, so if you had your stop up here, about 9 points, or if you had it up here, about like 16 points. Fuck. But yeah, with the trade I took today. So since I took the L earlier today, this is my evaluation account on Top Step. Since I took the L today, you know, that had me on a little bit of a drawdown. But with the trade I took today, it brought me up to being 185 in profits. You know, it may not be a lot. It may be a lot to some of y'all, or it may be not a lot to some of y'all. Don't really think about the profits, just trust in the process, because once you perfect the process, the profits will come. Because for example, I could have easily took, so M and Q is $2 a point. I could have easily just taken NQ position, and it would have been $20 a point. So this 185 would have been 1,085. So don't think you have to catch super big ass moves. You just and think about the profits. Just think about the process, and from there the profits will come. You just kind of up in the size. But yeah, I'm gonna end this video, and I'm gonna go ahead and make another one for yesterday's trade. I know I said I was gonna do that yesterday. I just got caught up with time. You know how it is. But yeah, I'm gonna go ahead and drop this in the Discord and send y'all the link. Alright. Look at that. Look at that. Look at that. If you were in from here, you had your stop up here. Look at that. Quick little rundown. Fake it on this trend line. Break. Look at that. It's fucking beautiful. From 19,121, it's down at 19,076. That's like what, fucking 50 points. Look at that. It's still dropping. But you know, for me personally, if I traded at the 9:45 to 10:15 and I took a dub, I'm not gonna trade this session because you know it possibly could not work. So why risk my profits? Just be happy with what I made and call it a day and go enjoy my day, you know. But you know, if I take an L here and I trade this one, I go a little bit lighter size. Some people say go half. I go like about just one position less. You know, it's really up to you. But risk management wise, you know, think a little bit smart. Half would be smart, but you know, I just do one position size less. It is what it is. But yeah, you know, this move just came out of nowhere, you know, just right before we ended it. Just wanted to point that out. And look at that. Where did we go into? Let's go ahead and remove this. Where do we draw down into? If y'all don't see it yet, look at that. Another bullish FVG 15-minute chart. And I didn't want to show you guys on this one again. We never really had a rundown. Like, it's just straight up. Like, this is a perfect trade right here. But yeah, from there I'm gonna end it now. Alright.